What's good, yeah? It's Johan. I'll come back at you with another video. So for this video, we are going to be doing a trade breakdown for NAS 100 for Tuesday, June 11th. And jumping right into Forex Factory for the news. Of course, we do not have any news on this day, which is great. That just means we have to pretty much just focus on what takes place for 8:30, but more importantly, that 9:30, which is the stock market open. The rest of the news, we have CPI, FOMC, core PPI, etc. Pretty much I'm not trading on any of these days. My rule of thumb is the day of CPI, I don't trade the day of or the next day, which in this case is core PPI, and I don't trade on core PPI. But the bigger thing is whenever there's FOMC, the day of FOMC and the days that follow for the week, I don't touch the market. So in short, I was only behind the charts Monday and Tuesday. I already posted the trade breakdown for Monday, June 11th. So if you haven't seen that, go watch that. A lot of great gems are posted there. Um, I go through obviously my trading strategy, the logic behind the trades that I took, so that it hopefully makes sense for you. And obviously, I'm going to be doing a breakdown for Tuesday, July 11th. So, as always, the same logic that I used to trade follows. Um, so we're pretty much just repeating the same thing for Tuesday, June 11th. So let's start on the daily time frame. So clearly, there's not really much to talk about. If you look at price clearly took out the highs right here, blasted right through so far, right? It's an aggressive push up, creating new all-time highs. So it's clear as day that price is just going up. So we are extremely bullish, meaning we are only looking to take buys. I will not be touching or even looking at the sell button today. I'm only looking for buys. So it's literally that simple, that straightforward today. So jumping right into price, what I like to do for you guys, I don't really need to do this on my chart, but I like doing it to show you guys. I like to put a vertical line at 8:30 a.m. And just so you guys know, I trade, I live in New York, so it's New York time. But if you're not living in New York, if you want to trade the same exact strategy, you need to set your time for TradingView, your time zone to UTC-4 New York, because we want to make sure we're on New York time when this stuff is happening. So you can begin seeing that certain things happen with price at certain times, right? And time is the most important element when it comes to my style of trading because certain things happen at certain times. So you want to make sure you're behind the charts watching for certain events to unfold so that it can give you, like your signature, it can give you your confirmation to take the trade. Um, so that's that, right? So here 8:30, we want to see where is the most obvious swing high and swing low so we can mark our liquidity pools. Here I'm on the 15-minute time frame to do this, right? So clear as day, the most obvious swing high is right here, right? Because price is at this level. So now the most obvious swing high, boom, the one to the left. Super easy, super simple, buy side liquidity. Now the most obvious swing low, another easy selection here, right? To the left of this line, right? This is the point that we're going to be using. So we have our two liquidity pools marked out. Now, remember, um, we are bullish. So if we're bullish, then we would hopefully expect a lot of these buy side liquidity targets to be taken. And which targets am I referring to? A high right here, high right here, high right here, right? So we already have our two liquidity pools of buy side and sell side liquidity right here. So these are our low hanging fruit, our more obvious, easy to hit targets. But in a case like this, right, if we're bullish on the daily, then we're technically expecting the high of yesterday to get taken, which is this high up here, and this is the all-time high that was made. So if we're bullish, we're expecting that this high to be taken long term or like a longer term. So it may happen this day, it may happen the next day, it might happen later the week or next week, whatever. Um, but that's what it is with our bias. But for me, I like just going after the short-term targets. So I will just be focusing on these liquidity pools. But if you watch yesterday's video, I break that down as well. So just jumping right in, we have our two liquidity pools marked, right? We're starting to see price sort of like consolidate a little bit, and then we're already at 840. So let's just see what happens between 830 and 930. I guess everything that happens prior to the 930 stock market open. All right, so I'm just fast forwarding candle at a time, see what's going on with price. So remember, we are bullish on the higher time frame. So what I'm looking for, I'm only looking to take buys. Where do I want to take the buys? I want to take the buys under sell side liquidity, and I want price to make after the 9:30 open. I want price to essentially make the low of the session, right? Because if we're able to take buys under sell side liquidity, what that means is that we're taking a buy at a discount. So we're basically trying to buy price when it's at one of its lowest points in the marketplace, which will give us one of the best entries to ride price to buy side liquidity, right? So um, this large candle right here, this is the 9:30 open right here. So now is officially 9:30. So now I want to see what price does. So beginning from this 8:30 candle to 9:30, neither of these liquidity pools were taken, right? Obviously, they still remained intact. So we want to see what happens. All right, so as you can see, clear as day, price came and cleared the immediate buy side liquidity that was here. Now, in this case, you're probably wondering what should we do? Because if we want to look for buys, we want to take price ideally under sell side liquidity, ideally under this low, so that we can take price higher. But if buy side liquidity was already taken, it's like, what do we do, right? We don't want to just take a trade and then take a trade in a direction where there's no liquidity, right? In a case like this, I don't really worry too much if buy side was tapped into. And the reason for that is because even if buy side was taken first and then we make our way down to take sell side liquidity, by the time we make our way down to take sell side liquidity, the high, for example, like this high, whatever high that gets formed, would be new buy side liquidity, right? Like there'll be more liquidity above the high, there'll be more orders, it'll still be a valid target, right? What's most important is that we want to see a sell side get taken. We want to see some sort of sell side liquidity get tapped into because that is our cue to take price higher. So that's why I don't really concern myself when something like this happens. Obviously, I still have the ray right here for buy side liquidity, um, but price is making new highs. So what I like to think of this, I like to think of this as essentially what the market is doing. This you can think of this as the market trying to take out the early buyers. So this is buy side liquidity. These are people that have buy stops up here. These are breakout traders that once they seen price push up, they all started buying because they're expecting price to push up and go higher. However, we're doing, we're being patient. We don't want to buy up here, right? Because that wouldn't be a good place to buy. We want to buy down here because if we buy down here, then we're able to ride price higher. We want to get the best bargain, the best deal, the best entry point as possible to have a tight stop loss and to, take price into the direction that it's most likely to head to, right? Like we're most expecting price to most likely want to keep going bullish. So I want to take a buy. I want to buy low and then sell it when it gets high, right? So that's the same logic here. It's tripping buyers who bought too soon. So that's why I don't really concern myself if I see something like this. And now, right, you're seeing price just now begin slowly making its way down. So once I seen this, that was a great sign because now sell side liquidity was finally taken at 947. So you have sell side finally taken. So now you're probably asking, where's the buy side liquidity? Well, buy side liquidity is up here, right? The buy side liquidity is up here because this high slashed through, price came down, broke structure, it came back up. Obviously, it didn't clear this high again, and then it went right down. Right now, you're probably also thinking, hey, Joel, why didn't you just take a trade here? Because you can see price came up, slashed through this buy side liquidity, Right, price came slashed to this buy side liquidity. It came down, you know, broke at least a little bit of structure right here, left a gap. Like, why didn't you take a sell there? Well, the reason why I didn't take a sell there is because I'm bullish. So I don't, if I were to take a sell here, then I would be going against the overall, the higher time frame buys and my daily buys, and I'm not gonna trade against my daily buys. So I was not looking to take any sort of sells. That's why the whole time I'm literally just watching price sitting on my hands until sell side got taken. There's literally nothing for me to do. If this is not, this is the catalyst for any sort of trade setup that I take. This has to happen, right? If I'm bullish, I need to see sell side get taken. I need to see sell side get taken, and I need to see price make the low. In this case, right, we're bullish, right, to make the extreme of the session, like to make the low of the session. So if price just decided to just do this, right, I would just be sitting here for the rest of the session. And if it never clears sell side, I wouldn't take a trade, right? So this is the very first catalyst of me even considering that a trade idea might happen, and that's when liquidity gets taken, right? The liquidity pool that I want to see get taken, so then I could trade it in the opposite direction towards the opposing liquidity, right? So this aggressive push down, that was a great sign. So now, like, my ears are perked. I'm alert. I'm watching price to see what's going to happen, right? So I want to see some sort of structure get made because right now, if this is the buy side liquidity up here, right now the only structure point is this one, right? That is the only well, and obviously like this one here, but this is literally the only structure point that exists so far. If price were to go up, and obviously I don't want price to break structure right here because then the target, my final target would be right here, and then it would just be a horrible risk reward. So I would like to see price make another structure point in the marketplace. Boom, so it pushed down again. So here we go, another structure point right here. So I'll get rid of these, right? So you guys are seeing this when price is unfolding full time. This is what I'm watching. Liquidity got taken, sell side got taken. Boom. If you guys need some sort of reminder, you can put an eyeball. I like doing the eyeball too, right? If you want to make it bigger, you can make it bigger. But the eyeball, you can have that be your confirmation that sell side got taken. And I like to make it the same color of the liquidity. So it's red because in my book, right, sell side liquidity is red. So red eyeball, that lets us know, boom, confirmation one met. Now two, we want to see a break of structure. Well, before we see a break of structure, we want to make, like, there has to be some sort of structure point that exists. Now, some people are probably asking me, why didn't I use this high as a structure break, right? Because price, this bullish candle, clearly came up and blasted through this high. The reason why I didn't use this high as a structure point is because I want to see structure be made prior to the lowest point in the marketplace. So what do I mean by that? If I rewind one candle, the lowest point in the marketplace is this gold candle right here, right? So this gold candle right here. So pretend I'll just do it like this to make it easier. All right. So this is the lowest point in the marketplace. Where's the most recent structure point? To the left of this low. It's all the way up here. So even though price, this technically was a high, right? Because you had a candle to the left and candle to the right of it formed. This high was not formed prior to the lowest low. I'm always looking for the structure point that's to the left of the lowest low that was formed, not to the right of it. So even though this candle came up and technically went past it, that's not considered a market structure shift in my eyes. And it worked out because obviously someone would say, you know, have a fair value gap. You should have taken a buy right here. And obviously, if we did, we would have been stopped out. So this is why it's important to have everything clearly mapped out as far as what you're looking for so there's no confusion. That's why when I seen this happening, I didn't even flinch. I didn't move a muscle because that didn't count as a a high for me for a market structure shift. Now, because price came down and blasted through this low right here, right? This candle here blasted through this low. What is the last swing high before that? Right here. So that is a valid structure point in my eyes. Now we just move one candle at a time. Boom, right? So clear as day, and I'll make it array. Clear as day. You see that this candle traded through this high. So it does not matter that it did not close above it. The second this candle went even one pipette, one tick above it, I consider that a market structure shift. Now, obviously, clear as day, you're seeing one gold candle, two, three, four in a row. Because remember, this whole move is bearish, right? This whole, look how many black candles compared to gold candles. It's just bearish, bearish, bearish. You're seeing overwhelmingly black candles. Now, all of a sudden, after this low gets swept, you're seeing nothing but bullish candles on top of a market structure shift. So, to me, that's clear as day that price wants to push up, right? Which we're bullish on the daily time frame. So that's exactly what we want to see. So now all we're pretty much missing is a fair value gap. And obviously you have a tiny one right here. So some people can use that, but once again, I don't really like using those tiny fair value gaps. Are they valid? Sure, but I want a fair value gap that is so obvious that you won't miss it, right? Like I want a fair value gap to be an actual fair value gap, like an obvious space in the market. So here, price trade through, and then the next candle's here. So this is what I'm talking about. Clear as day, a fair value gap. Like if you train your eyes to see these gaps, like you wouldn't miss a gap this big, right? So that is essentially what I'm looking for, a big gap in price like this, because this means that price moved extremely fast through, and if like didn't offer sell side um in this big gap here. So that's essentially what I want. So this fits all of my confirmations to take a trade. So here um they're equal lows, right? Yeah, so and then now we have it right here. And then this is basically the trade. So this is 1 to 1.6. So about, yeah, 1.6 risk to reward. So not the best risk to reward. In a perfect world, I like 1 to 2s. The very, very bare minimum, I'll take a 1 to 1, very bare minimum. This one's a 1 to 1.6. So obviously not the best. Could be better. But for me, like I said, I like going for low hanging fruit. Obviously, if you see something like this and you see the risk to reward being 1 to 1.6, can obviously look for higher targets, right, to try to maximize the trade, right, because we're bullish on the higher time frame. So you have highs up here, highs up here, highs up here, and then a new all-time high here. So these are all targets that you can also put if you want to make, 10% of your position run to this high. You can you can do that, right? So then you can maximize more of this position, right? You don't have to close the final target here. But for me, of course, like I mentioned, I like going after the low hanging fruit so then I can be in and out of a trade ideally within like an hour. But obviously, sometimes like the market has a mind of its own and it can move at its own pace. So sometimes it may take 2 hours. Obviously, it all depends. Um, but that's why I'm an intraday trader. So I kind of want to be in and out, like ideally within that the same session. In a perfect world, before noon, right? So that's pretty much what it is. So this trade met all of our confirmations, so now we are confident to take a buy. And at this point, um, we can slap on a fib just to see what other targets exist. And we want to see if there's any targets above 50% that we can take partials from. Now, granted, it's only a 1 to 1.6 risk to reward, so there's not really many like viable targets that you want to take partials in, right? But we have a fair value gap here that you can take partials in. We have a high right here, which is super close to the final target. So some people might not even need to take partials here, but you get the idea. When I took the trade, I had this high basically be like 80% of my position because obviously the final target is super close by. So I didn't want to be greedy and just, even though it's very possible and very likely that it'll clear this high, for me, I'm perfectly fine with taking partials as I get them, like small wins. So I like to organize my chart. So I will say 80% off here. So that's pretty much how I had it. And then what I like to do now is I like to look at the 5 minute time frame to see if there's any swing highs, any 5 minute swings that exist. So right now we don't see any. So um, this could be a position that I would like take all the way to just final target as is. So let's just see what price does. And just so you guys know, this fair value gap right here, it's within the displacement range of the displacement high to the displacement low. For you guys that don't know what I mean, it's the range, like the last point of structure, the last high and the last low that makes up the structure point before structure was broken, which I highlighted in pink, right? You want the fair value gap to form within the pink box, like that's the displacement range. And clear as day, the gray shaded box appears within that range. So this is a valid setup for us to take. So now at this point, we have our limit order set, or we enter at market, and then that's what it is, right? We just lay it out. So if you had it set up that you would take partials here, right? This was at 10 o'clock. Literally 5 minutes later, you would have taken partials here. So this could be that you close 20% of the position. It could be that you close off 50% of the position, right? Um, at the end of the day, you want to minimize your risks when it comes to trading and maximize your profits. So in this case, this would have been a great spot to take partials. But for me, I didn't take partials there. I just wanted to take partials above this high, which is close to the final target. On the 5 minute time frame, there's still no high that was formed, so I'm just being patient, just watching price. So that's pretty much what's happening with price. So most times I'm watching price on a 1 minute time frame, but I'm also periodically checking the 5 minute to see if any sort of highs get formed, any swing highs get formed that gets broken, so I can move my stop loss to break even, which in this case nothing did yet. But as we keep fast forwarding it, this candle right here at 1024 blasted through this high. So at this point, I closed off 80% of my position, and then literally like 5 minutes later, right, a couple candles later, boom, price came up and blasted through this buy side liquidity here, which takes me out. Like, it cleared the final target. So that's another win. Obviously, you can see here, based on the trade, that price broke through structure, left a fair value gap. It tapped into the fair value gap and then just exploded and just went up the whole time. So price is just trending up and up and up and up and up. And the funny part is, if we were to go on the higher time frame, right, 5 minute time frame, remember we are, I'll just do a little bit bigger, a 15 minute time frame, we are obviously bullish. So in theory, we should eventually expect to see this all-time high get taken because we're bullish on a daily, and literally um couple hours maybe, I guess you could say, yeah, couple hours later, you see that the all-time high was taken and made here. So if, like I said, if the risk reward isn't fully to your liking, you could take some partials there and then, target these other, pools of liquidities, other highs as targets along the way. And, if it could smash those targets as well, and then you can walk away with more. But for me, I like going for the low-hanging fruit because that's just easiest. I'm just trying to, you know, take the trade and win it, protect my account, and make profit and just keep it pushing. So that was the trade breakdown for Tuesday, June 11th. And so hopefully this makes sense, the logic for you guys. I'll just throw in this little bonus right here since we are here, um, to help explain why I trade in this fashion And for this case, I guess we can just can even use like the weekly time frame. Um, because I want this to make sense for you guys. So let me try to find one good. Oh, perfect right here. I will just use this candle here. Um, okay, yep, I'll just use this candle right here. So one of the important concepts that I use is called power of three, right? So this is the important concept. So without boring you guys with the mind numbing information, I recommend that you go on YouTube and search up this concept because this can completely change your trading. This has changed my trading drastically. Like that's what I use like on a day-to-day basis. But what this is the power three is essentially explaining the anatomy of a candle. And what I mean by that is, for example, we focus on this gold candle right here. Let's look at four important components of the gold candle. Now, hopefully, I'll just use like a trend line, right? So, there's a few important components of a candle, right? So here, this is obviously the open. Obviously, the candle's open, right? Like this bullish candle, I mean this bearish candle closed here, and then the candle opened here. This is the open of the candle, and this this is the low of the candle. Obviously, this candle that closed right here is the candle close, and this right here is the high. So the power of three basically says, for example, this is obviously a bullish candle. So the power of three is basically saying that when a candle opens, if we use a bullish candle as an example, right, the candle opens, it starts off going to the right, right? Because let's just imagine this is the opening price. Then in theory, price goes down from the open, right, to form a low. Now, granted, when price opens and goes down to form a low, that is the fake move. And the reason why that's the fake move is because price opens and when it goes down low, it's not only tripping sell side liquidity, it's activating the sell side liquidity, it's also tricking traders into thinking price is gonna go lower, price is gonna go down. And if traders thinking price is gonna go down, what are they gonna be doing? They're gonna be selling. So everyone's selling, 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 selling. But the market doesn't want to go down, it actually wants to go up. So if it wants to go up, if the market wants to go up, that means the market wants to buy. So if everyone is selling, then that's the perfect counterpart for the market to buy, for the market to put in its buy orders. So when it's going down, it's not going down because it wants to go down. It's going down to get traders into thinking it's selling to activate all the sell side liquidity so that it can open up its buy orders. It's yeah, so it can use it as a counterpart, right? So it can start buying. So when it's going down, the market is actually opening buy orders and it's getting the buy orders at the lowest price. So they're buying low to sell high. They're literally getting it at the best price possible for the day. And then that's when, after that happens, right, you see, and while it's going down, obviously a bearish candle is forming, right? But then price starts reversing and then it begins going up and up and up and up and up and it makes a new high. And when it gets to the high, that's when the market begins to sell. It's obviously activating buy side liquidity now from all the traders who it's going up, right? So now obviously there's a lot of buying happening, a lot of buying happening. So when it gets this high, that's when they begin to sell. Why do they sell their orders? Because it's now buy side liquidity in the marketplace. So if everyone's buying now, they can sell off the orders that they purchased because now they have the counter orders. And so that's why when price makes this high, you start seeing that price comes down and then it closes here because price is now closing all of the orders that they bought down here are now being closed up here. So That's what power three is. Power three is accumulation, manipulation, and then distribution. So that's what it is, right? Price accumulates here, and then price gets manipulated to push down to activate the orders, and then it distributes, meaning that it just sends price in the direction that it wants to go. So if you guys understand power of three, it makes sense why I trade the way I do, right? That I'm waiting for sell side to get taken before I activate it. I jump in a buy because then I'm jumping in a buy at the lowest point of the marketplace. So I'm buying as low as possible to then obviously sell it high and sell it when price hits those other targets. So it's yeah, I'm literally trading in alignment with how the market operates. So that's that's pretty much that. So if you enjoyed this video, to leave a like, comment down below any thoughts you might have, any questions regarding either my strategy or with trading in general. I definitely want to help you guys and you know help you guys obviously become successful traders, hopefully be funded, all these things. Um, so any thoughts you might have, any questions, I definitely want to read through all the comments and respond to you guys. So do let me know down in the comments below. Subscribe if you found this helpful. I'm obviously going to be pumping out more content in the future. So your support is greatly appreciated. And share this video with anyone you think would benefit from this as well. So once again, this is Joel, and I'm out. See you guys next time.